All right.
We are live.
Take it away, Ingrid. Who are we?
Hi, this is Ingryd Hernandez and my pal TheCarolineCain.
Hello, hello, hello.
We're here with the Explain It podcast and the very much anticipated podcast with Matthew Bell. We will be talking about doing subject to deals and having an amazing lender partner ready to go, because not every subject to deal that we do has a distressed seller. Oftentimes that seller has to go move somewhere and needs somebody who understands the intricacies of what that looks like. So we're excited to have Maddie B. He told me we can call him Maddie B on the podcast. But Caroline, those deals, are they coming through? What do you need? What do you need from the people?
What a great question, Ingrid. Well, we are partnering on one of these deals, and let me just say, dealing with people that are in pre-foreclosure and helping them, it is a gift. And I've heard some people say it is a curse because there's all of these avatars you can call them by. And I've labeled them as ostriches for most of the people, because when you're in pre-foreclosure, you're just kind of overwhelmed. And I think a lot of people think they can just wait it out and it's all going to work out. So the house that we are looking to fix and flip. What's up, Luciano? Oh my gosh, we got everybody who's on here right now. If you would do us a favor before I kind of talk about a few deals and how we can bring Matt in to help us out, if you could be so great as to share this with somebody. You do not want to miss today's podcast. This is going to be one of the best, especially with understanding how when you sell a property or when you buy a property subject to that home, that seller can go buy another house. So we're going to get the party going before we get Matt up here. But I want to talk about this deal, and I've just been, Ingrid, oh my gosh, this guy, I've been going back and forth. He went over to the house with me and just trying to get him to realize his house, everyone was actually already auctioned off. Ingrid, it's foreclosed, correct? You would call it was foreclosed by the HOA and auctioned off by the sheriff, correct?
Yeah.
Yeah. So anyways,
but then he has redemption rights when it's a sheriff's sale.
Yes. Well, anyways, I get up early. My day really starts, my work day starts at 5 a.m. So I'm early, and I go to bed pretty early. I don't answer you typically after 8 p.m. And I'm texting him at 4 a.m. and he's responding to me. And I'm like, what is this guy doing awake right now? I usually have a really hard time getting a hold of him. And he's like, I'm on the phone with the bank. And he's like, they're going to let me keep my house. And I'm like, that's not what's going to happen, because your house is actually legally owned by this different company who bought it at the sheriff's auction. The only way that we're going to be able to get you some money, fun facts for everybody in here. The only way that we're going to be able to get you any money for this house is to go through the short sale. So we can get the redemption rights and cash it out. And then we're going to be able to pay you some money for the contents of the inside of the house. And we have been going back and forth quite a bit. And I've explained it to him multiple times. Actually, I wonder if Matthew Potter's answered me. I emailed him earlier. This is the first time in a while I have not left my desk for most of the day. I have been going through all kinds of emails. I had another seller that I've been trying to get her to sign her contract for 2 weeks. Her auction's on Monday, and she finally signed it last night at 10:30 p.m. after she's had it for 2 weeks. So sometimes these sellers, they just really want me to go gray early, I think. And I understand why you go direct to agent. It's almost not as stressful as it is going direct to seller with somebody that's in pre-foreclosure. So what do I need right now? We need money. We need money for deals. So if you guys want to get in on these deals and see how it is riding shotgun, the house that we're looking at to fix and flip right now is actually a homeowner who sadly has fallen on some rough times and is dealing with some addiction issues. And there's been some people in there. He's got lots of roommates that don't pay rent, but they all send a party together. So I think we're going to have to do a full remediation on the house. Does that sound about right, Ingrid? Because of the drugs that we've seen in there and we know that they're using?
I cannot confirm or deny what we saw. And so we don't know what level of that is required. I will say this. Yes, I have a couple other deals as well that are a lot more smaller entries. So folks, have some 20, 30, 40K that they want to see grow safely and slowly. But they want to also have the opportunity to see what a subject to deal looks like. I have a couple in the pipeline ready to go. So
well, I'm good.
We need money for that. We need money for fix and flip. And let's talk to somebody who dishes out money like left and right every day. He is Mr. Money Bags, Matty Bell. Should we bring him up?
Let's bring him up, guys. If you don't know Matty Bell, you need to get to know him. What's going on, Matty Bell, branch manager at Mortgage Veteran?
I should have put my Instagram handle on there. I didn't, but Landon Moore just accused me of spray tanning, which I've never done a spray tan. So,
what is your Instagram name? I'll change it for you.
At Bellgroupcmg. CMG is my mortgage company.
Okay, got it. Done. There you go. Now we all know who you are.
Sweet.
Nice.
Happy to be here. You guys are like rock stars. I'm just like this little stagehand.
I don't think so, but we are super excited to have you. I know that I often hit the social media boards and answer questions. It's how I generate leads, how I generate relationships by helping people get their first deals or working with me to get their 10th deal, whatever it might be. And oftentimes the questions that come up are related to things that only someone like you can answer. So we're super excited to have you on here. I know that you were here. I got to meet you a couple months ago when you were here at Kevin Cho's meetup, and you were like blowing my mind. I love when I learn new things, and it was amazing to hear what you had to share. So hopefully we can give folks a slice of that kind of information you gave us. So yeah.
Well, gosh, I could even give you 7 stories today of 7 sellers that I talked to. I mean, this is just to give you guys a flavor for just the sheer need or gap in this marketplace.
Mm-hmm.
If I showed you my Outlook calendar, you would literally see about 47 seller calls since last Thursday.
Yeah.
Wow.
For various reasons. My lender left me at the altar because they didn't really truly understand what selling Subto was. Or the LO said it made sense, but the underwriter's like, I have no idea what this is. It doesn't make sense. We're just going to decline the loan. Or they're just straight referrals from the group and they don't want to go through being left at the altar. And so they're just like, just call this guy to his team. I've got 5 people on my team that we just make it super easy and efficient. And then obviously, I think the big kicker, I probably should have said this back in April, but being licensed, across the country, CMG's licensed in all states, allows me to help somebody in Arizona. Literally just hung up with the seller an hour ago, moving from AZ to Oklahoma. And so being able to have that cross-state ability to serve clients just makes it easy. It makes that process efficient, which only sets up the Subto buyer to make their offer more solidified, and they can compete with any other retail offer.
That's right. That's right. So one thing I will want to highlight, because he said he has 5 people on his team. And I know that you and I have talked about business owners, Caroline. So one of the things that Matt has done well is streamline his business. So truly treat it like a business, leveraging other folks. And that's why it's easier for him to have this many calls with this many leads, because he's got a team behind him making sure things get done. And so that's why I refer Matty B out, because I want to make sure that whoever is getting that service is really going to be supported. So
that's critical. I think for everybody in here, and if you're new especially, systems and processes are what's going to catapult you, make a catalyst and let you be successful. So it's really nice to hear that you're going to vouch for him. I know I've interacted with you before, Matt, and you've been super organized on stuff. But for anybody, when you're working with somebody, trust but verify. And the fact that he already has these systems in place and you have a team, it's incredible. I know right now I'm overwhelmed in certain aspects because people call me when I'm on the phone with other people. And it's like, I'll get to you when I can, but I'm wearing a lot of hats at the moment. I can't wait until I have less hats to wear. So you seem so dreamy.
I can tell you what my systems are. Obviously, it's learn the hard way. I'm a big technology guy. And so for me, it's all about telephony. What's my telephone system, my text message system, my CRM, and those are the things you obviously can purchase, plan for. And then there's the daily grind. I mean, literally today we've gotten 126 text messages, 36 calls, 24 voicemails. So how do you actually manage all of that and don't let people fall through the cracks? And so I'll just sort of peel the curtain back. If you guys do business with me, you'll be a member of this in a way. As a loan officer, every single deal, although easy philosophically, documentation, the ins and outs of every single deal are quite literally overwhelming. If I were to peel the curtain back on one transaction, most people would just say, I never want to be a loan officer. That's all you, buddy. And so you've got to solve for all of those downstream things. And that's what the 5 people help me with, underwriting, closing, legal, everything. So that's covered. If somebody calls me, if I miss that call, which is rare because I've got people answering my phone, and if I'm available, obviously, if it's a new client, I'm taking that call. 20-minute response times is crucial in my industry. But if I miss a call, that missed call goes into Salesforce as a missed call /lead.
Nice.
If they're not in my CRM, and obviously the phone number and the email address are connected, it registers it as an unread task or a lead. And at the end of every day, my assistant and I have a calendar at 4:00. We go in and check the unread tasks and leads. And we make sure we know, okay, that's not a lead, that's an insurance agent, or that's an appraiser. Obviously, those can push to tomorrow. But it's those things that have taken me a lot of years to figure out what would I want. If I'm a client calling in, I don't really want to wait 2 days for a call back. Nobody does. If I'm a realtor, I'm not waiting until tomorrow, bro. I'm just not. And so those things are crucial. So I use Dialpad for my telephony system. Dialpad has AI features, but Dialpad has a native integration with Salesforce. You don't have to do Zapier and all of these integrations. It's built in. So whatever happens to Dialpad happens in Salesforce. Whatever happens to Salesforce happens at Dialpad.
That's pretty cool.
And it's also integrated with my loan origination software. So my system. And
that's really nice, because actually Marlon and I were talking. He was eating lunch earlier, and we were just kind of talking about his loan officer. Actually, he's doing a refi right now, and his loan officer has been has not followed up with him. And the only reason things are getting done is because Marlon keeps following up. I've had to talk to my attorney lately, and same thing. Just you have to stay on top of people. So it's really cool that I'm going to implement that in my business now that I'm thinking about it. What have I missed at 4:00, and what can I hit in that last hour? Because I was the one doing all the outreach, even though I'm paying the attorney. It's where are you? I need, why have you not answered me in days? So that's a really cool aspect. People are going to get a response from you same day. Yep. That's really cool.
Now I do fail sometimes. I do fail because there's only so much that 2-3 human beings can do in a day. Last Thursday and Friday were utterly insane. We had 50 voicemails, 250 texts. So I'm working Saturdays. If you're not working weekends in real estate, you're in the wrong industry. And so that's just naturally part of the game. So there is no sexy 8 to 5, Monday through Friday, you leave work at work scenario. It's just not going to happen. But there are those days. There are those days that are quiet, where you get loan stuff done and caught up. And then there are those days where it's just nuts, and you're on 25 phone calls back to back to back, and you better have your caffeine. But when you've got a team doing all the heavy lifting, I'm obviously guiding them on the transaction, the documentation piece. That stuff's easy for me, because I've done it so many times. I have the same 6 underwriters that do my deals. That's why it's crucial to have your team. Once you have your team in place, you guard that with your life.
Yeah.
Because then if you know what you can do based on who works for you or works with you, it makes you able to fulfill your promises a lot more clearly. And in my world, everything I tell clients is a promise until it's done. And that's crucial for me. I want to be able to say something and it actually come true.
You look like you have a question for him before I jump in.
I was trying to remember what I was going to ask him, but I got sucked into how everything is systematized. So I don't think I have one right now.
Well, perfect. Well, I will ask. So Matt, how did you get into becoming a loan originator or what is your actual title?
Branch manager, senior loan officer. So
okay.
I run a branch, a retail, we call it retail. I'm in a physical office. I have loan officers that work for me, and they do their own individual production, and I manage them, help on the side. Not really a whole lot of management involved, but being a senior LO means that I'm really spending 97% of my time on my own production. And so you could call me a producing branch manager.
Okay.
I actually remembered my question now.
Okay. Well, take it away then.
I was going to say, with so many lenders right now going back to Target or Walmart to work, what is standing you apart from the rest?
Oh my gosh, that's a great question. So we had a national all hands call yesterday with our CEO. CEO is former head of the Mortgage Bankers Association. It's the equivalent of being like the head of the NAR. And we were talking about some really well-known companies that are on the chopping block. I'm not going to say names. We are on pace to have our best year through end of September that's going to beat 2022. And here's myself, apart from other LOs in our company and even in the industry, you cannot be a one-trick pony. Meaning if you focus on one vertical or one client base, or let's say one type of client, like financial advisors or investors only, you're going to be subservient to their business model. I cut my teeth. I grew up in the high net worth space, so I know complexity. I know complex, high net worth, multi-million-dollar clients, and that really set me up for this piece. So documentation and complexity does not scare me. There are some LOs that I'm friends with that if it's not straight W-2 and easy, they just kind of check out and they'll say, we can't do that loan, even though they can do that loan. And I think a lot of LOs that are in this industry are finding that it's not pouring in like it used to in 2020, 2021. My phone was ringing nonstop those 2 years. And then March of 22, when rates started going up quickly, the cream started to rise to the top. In this world of Subto, obviously you get introductions to so many different types of transactions, multifamily apartments, DSCR, new construction, and then being licensed in all states makes me super dangerous in a lot of good ways. And so I've always prided myself on knowing everything about everything. You'll never get that. You'll never get to that spot like a Pace Morby, but if you really know and desire to learn and grow, you've got to read your loan guidelines. You can't be afraid of financial statements, and you've got to have a backbone to stand up to high school educated underwriters. And some underwriters have MBAs, some don't, and you just have to know what you're talking about. And sometimes I can come across as very direct and very crass. I don't mean to. But if I know that the text says this, I'm going to tell you, the text says this, approve my loan. And so it just takes
You're the loan officer we want in our corner. You're going to be the ones like, I've read the rule book. I know how to play the game. These are the rules. This is like legal. Make it happen.
You really have to be the smartest person in the room if you want to succeed here. If you're just like, oh, shucks, the underwriter said we can't do it, you're just going to succeed maybe for a little bit, but you're going to fail eventually. So I've always prided myself on being the smartest person in the room and trying to not act like it. You kind of have to be humble. And you kind of you have to let underwriters, chase their tail and read the guidelines. And you're like, I told you, page 26 of the FHA handbook says this. Just approve the loan.
How long have you been a loan officer?
August 1st of 2004 was my anniversary. I was a retail guy. I don't have a college degree. I made a lot of poor decisions as an 18 to 21-year-old. And
haven't we all?
I had a full ride scholarship to Texas A&M. I mean, I had my path written. I didn't go. Got married at a young age, had a lot of kids by the time I was 22. And this lady I worked with, and she was like, this is 2004. This was during like the whole subprime boom, if you will. She's like, hey, I'm going to work for a mortgage company. Apparently these guys make 20 grand a month. Do you want to try that? I was like, that sounds great. And so literally showed up August 1st, didn't know what title was. I was like, what's title? And so fast forward, went through obviously the ebbs and flows of 05 to 08, 2020 to 2022, and then now, and there's really not a whole lot I haven't seen.
That is true. You went through the most tumultuous time, I think, in lending. Although arguably you went through the easiest time in lending too. Like, hey, I have a pulse, give me some money. So anyway, well, I'd like to turn things a little bit into what are common questions that are asked of you in this sort of creative finance world. Again, I was mentioning how I generate leads over to you quite a bit because of the kinds of questions people ask. And at the end of the day, it all comes down to having an experienced loan officer who knows how to navigate through creative finance. So what are some of the most common questions you get that you have to help explain? And if there's an ability to maybe answer those, I understand you can't go too extensive, but if there's anything you can maybe hit it
Really,
the audience with, that'd be great.
yeah, I think the flavor of the day is VA. And as many times, my assistant will sit in my office and listen to me do these calls. She's like, that's like the 9th time you've said that today, the same exact way. But VA seems to be the thing of the day. Here's why. And here's a statistic that's, we're good friends as a company with Dave Stevens. Dave Stevens is like the former president of Fannie Mae, former head of the Mortgage Bankers Association. So we get a lot of insight into stats. We love stats. 85% of the current outstanding VA loan population has taken their loans out in the last 3 years. 85%.
Whoa.
That's incredible.
So when you think of the VA loan population, that could be obviously a combination of purchases, refinances, whatever. Those debts are so sexy right now. And, veterans, whether you're active duty or discharged, it doesn't really matter. You still have family needs. 3 veterans today that are active duty got relocated literally with a moment's notice. A couple of veterans are discharged, working on their own. But regardless of where they are in their military career, VA is kind of the hot topic of the day. And so most veterans, most agents that work with veterans think only that entitlement is their main barrier. Or they think that there's no way that my veteran can sell Subto or creatively and go out and get another property. And I would think by now the message is out that that's just not true, but it's just not. The message is still trickling out to the masses that it's just not true. But the entitlement piece is a big education that I do every single day, really multiple times.
So could you educate us? Could you educate us right now? Because I'm sure there's some people that don't know what entitlement is. What does entitlement mean?
So entitlement essentially at its root means, so let's peel back and get to the actual bottom foundational layer of VA. The VA does not make mortgage loans. Okay. They guarantee a percentage of a loan or insure a personal percentage of the loan to indemnify or protect the lender in the event of a loss. That's all they do. Now, the way that the VA is structured, the way that the benefits are structured is they will, right now, this changed in 2019 with the Blue Tidewater Act, but they will insure essentially 25% of that loan amount in the event of a loss. Okay. So right now, the average veteran, the average loan balance, if you look at the average loan balance, is anywhere between like 300 to 350. What you do, I've got my iPad here. If I can screen share, I'm not sure if it's allowed on this thing. Let me pull up my screen share here.
Ooh, this is the first time that we have the guest doing this. I know we really do need to incorporate it. There we go.
All right. Is that good?
Yeah, that's good.
All right. So let's say, and here's what I tell Subto members all the time. This is so easy mathematically if you just follow these 5 steps. You simply take, and you can find this out on PropStream. If you're on PropStream and you know what the loan balance was when they bought the house, this is all you got to do. So step number 1 is you take the loan balance at the time the loan was taken out, not the current loan balance. Okay. Let's say the loan balance was $325 a couple years ago. Okay. You simply take that amount times 0.25 on a calculator. And if you do that, you will arrive at $81,250. Okay. So what that means, this is what the VA is currently insuring on that transaction. Okay. Right there. So if the loan were to go south and the lender takes a loss, the VA essentially cuts a check for $81,250 to go along with whatever loss mitigation the lender's going through. Okay. So now that you know this number, step 2 is you got to figure out where they're buying, because the county loan limit, step 2, is what drives the entitlement that's allowed on that subsequent transaction. So for example, if you're in 98% of the counties in the US, the county loan limit is 726.2 as of right now. Sorry, I can't write. Let me go back here.
I have
But
to
right
remove
now-
this so you can be bigger. So you're not going to hear us for a bit while we show you so everybody can see your screen.
Okay. So let's say 726.2, sorry, that's a 2 right there, is the county loan limit in most of the counties of the U.S. The other counties that are not going to follow this are like Orange County, San Diego County, Marin County, and San Francisco, the high cost areas. But for most of the U.S., this is going to work. You take 726.2 times 0.25, and I know this by heart because I do it every day. You'll arrive at 181,550. This is what the VA is willing to guarantee right now. However, you've got to take this number right here and carry it down and subtract it, okay? So you take 181,550 minus 81,250, and you'll arrive, I'm not good at math on the fly, you'll arrive at 100,300. So this is what the VA is willing to insure on their subsequent transaction. And since this amount is a 25% number, step 3 is you just take this number times 4. And that means that the veteran in this scenario could buy a home for $401,200 and put 0 down. Essentially, they're asking, what can I purchase using subsequent entitlement and put 0 down? Because veterans want to put 0 down. That's what they're really asking. So when you guys hear my entitlement's not going to work, I can't get another house, they're really saying, I don't really know what I can buy, but I bet it's on 100% financing. That's probably what they mean by that statement. And that's why I'm like, well, hold the phone. You can. What you can buy mathematically at 100% financing will hinge on, obviously, step number 1, which is this loan balance at the time of origination, and then the county that you're wanting to buy in. And then the ultimate answer that they're looking for is this number right here. Step number 4 is, does that number meet their budget requirements? If it does, well, then great. Now the gloves are off. And now we can actually have a conversation with a veteran. And I'll say, hey, you actually can do that. Why would you not? What remains in your way of saying yes to a Subto offer? Okay. The other question, or the other, hiccup that you have to solve for, I call this sort of step 4B, is, well, what if this number is not sufficient? What if they want to buy a $500,000 house because the area they're looking in, that's just the price range. So all you do on step 4B is you take the area or the price they want. Let's call this the price they want. That's a bad abbreviation, but we'll go with it. Minus the price they can get at 100% financing. You just simply subtract those two. So 500,000 minus 4012 is 98.8. Now, most people think, well, then they just have to pay that right there to get VA. It's not true. They have to pay 25% of this difference. So 98.8 times 0.25 is 24,700. So if they want this price, but they qualify for that at 100% financing, they got to put this down in order to get that price. Now, is 24/7 a bad number? Not really. It's what, 5% down? If you look at it, 5% down is pretty average, even for a conventional loan. So when a Subto member comes to me and they're like, yeah, they can't do 400 because that's out of the price range, but 500 is in the price range. I'm like, well, does 24/7 from the Subto buyer as a down payment, does that meet the buy box? And if it does, oh, great, you solved it. If it doesn't, and they cannot, let's say they don't have 24 grand in their bank account, or the Subto buyer just doesn't want to give 24 grand, then we would do a conventional loan. There's still going to be a down payment required in that case. There's no way to get out of a down payment if they're wanting to go over their sort of $400,000 limit that you're looking at right here.
All right, let's see if I can. Dang, I'm trying to get us all back on stage where I can make you big enough, and I just don't know how to do it. It's not working. Usually when you share it as your own thing and it's not your screen, it works a little better. That might have been the simplest example I've seen of anybody explaining a VA. So from my understanding, because I'm a veteran, I was in the Army for 6 years, If I bought a house within my means, I'd have to put no money down. But if I wanted to buy a house that was like out of my budget, I'm going to have to put some money down. And you just explain that.
Well, out of your entitlement budget, it might be inside of your income budget, but if it's outside of your entitlement budget, it's going to be a down payment. Now, I've had veterans still put money down. They love the VA loan because it's still no PMI and the rates are still really good on VA. So there's still a good reason to put money down on a VA loan, unless now if it's like 10% down, 20% down, that there's really no benefit to doing VA at that point. Because you're putting 20% down on a loan when you could just put 5% down on a conventional loan. And I can obviously go into a scenario where you could avoid PMI on conventional on a sort of a next example if you want me to.
Okay, I have a few questions in the side chat. Ingrid, do you have anything before I go to the side chat?
Well, just to tie this up in a bow, because part of what you mentioned was still leveraging, like in your example, you had what would then equate to about $25,000 down payment needed.
Right.
The average Subto that I see, the down payments that are being given to sellers are between 20 to 40K, I'll say approximately, because those are, typical 10% or so purchase price down payments. So in the scenario you spoke of, where now the veteran can go and still get a second loan, is that correct? Under their VA entitlements, by the way.
Yep.
So let's demystify that. You can actually have more than one VA loan as a veteran, depending on your entitlement situation. So what would a seller do or be advised to consider so that they can use a down payment like that for their next loan?
Oh, good segue. Well done. So now the next objection, the next unclear piece of this is the DTI. Okay. Now the DTI can be solved several different ways. Solving it the way I'm going to describe solves the DTI, but also sets you up to use down payment funds from this transaction that you're subtoing on the subsequent transaction. And this is where you got to really pay attention to this, because there's a chronology to this. And if you violate the chronology, you could tank the loan. And so
don't tank the loan. No tanking the loan over here.
No tanking. We don't like tanking. So let me go back to the iPad here and I'll walk you guys through what I mean by this.
We're leaving.
Gosh, there's no way I can make him the big one.
All right. So let's walk through an average timeline. And again, for those that are watching, this is my ideal. The ideal doesn't fit every situation. You can work your situation around the ideal and vice versa. But here's how it should work. Number one, the thing you always have to remember is that for them to close on their next mortgage transaction, right now, you can execute contract. So I'd say you can execute contract and you can open title. Just do not close. And the reason why I say do not close is because once that deed is transferred, you can no longer offset the payment using this approach that I'm going to talk about. You got to wait 12 months. So, and I'll get into that here in a second. And I wish Pace was on this call, because I would advise him as to what the guidelines say, but we'll do that a different day. So let's say you've got a property listed for sale and it's just not moving, and now they're more willing to entertain a Subto offer. And let's say this is October 1st, and you've got a veteran who really needs to move, or they could be under contract. It could be one of the, I'm under contract, I got to do something now, or I really want to buy something. I'm serious about buying something, but I don't have a property yet picked out. So let's just call this the October 1st to December 31st, 2023 hypothetical timeline. Okay. What you can do is you can execute your Subto offer. You can open title on October 1st. Okay, great. Exchange earnest money, do all the things you got to do under a normal transaction. What I would recommend is that they also apply for a mortgage so that they know, here's exactly what I qualify for if I take this offer and I close in the next 60 days. Okay, so apply for the mortgage, open contract, open title on the Subto purchase. Those things are fine. If I'm a seller, I would want to know what I qualify for, and you don't really know what you qualify for until you go through a true mortgage application. So once they go through the mortgage application, let's call this a 10-day period. Okay. What we're doing is we're getting them approved subject to their home selling subject to, or lease purchasing is the official word that I'm going to use. Here's what we do to officially, I call it wash out the DTI. Okay. Now, when I say wash out the DTI, what I really mean by that is on a loan application, one of the absolute inviolable questions you have to answer is, do they own any real estate? And as of right now, they technically do. Okay. If they own real estate and there's a $2,000 monthly payment, PITI on that property, what is the plan to get rid of that? Okay. While they are the active owner, okay, I don't care what anybody else says, while they're the active owner of that property, the only way you can offset that payment is if you either have enough income to handle that payment and your new payment that you're about to take on, or to take what you call rental income for an undetermined amount of time on that property. Now, what you would normally do, you've probably seen this in the Subto group. This is not anything that we do that's fancy. Okay. You would do a lease. Okay. Now on VA, it's very different than conventional. On VA, I'm able to take 100% of what's in that lease agreement and wipe out the payment. So if the payment's $2,000 on the actual mortgage and the Subto buyer agrees to pay $2,000 on VA only, it's a complete wash. There is no haircut applied to that $2,000 that the Subto buyer is going to pay. Okay. On conventional, I'll get into that here in a second. But on a VA, we do a lease. Let me go back. We do a lease purchase. And the reason why we do a lease purchase, which is very different than a lease option, let's do a quick parentheses here. A lease option, in case you're watching this, is a lease agreement with the option to purchase. A lease purchase is a purchase agreement with dates, contingencies, closing dates, and requirements, with the ability to lease on the front end for either a certain amount of time or a undeterminate amount of time. Okay. The reason why lease purchase is my go-to mechanism is because if you're giving a down payment, let's say in the previous scenario, you really are going to give the seller 25 grand to walk away. Normally in mortgage world, that 25,000 from you to them would normally need to sit in their bank account for 60 days. It's called seasoning. It needs to season for 60 days to be considered usable funds for their current mortgage transaction that they're trying to do. When the 25,000 is part and parcel of a bona fide transaction, it's allowed to be used. So the two birds you knock out with one stone, the lease purchase agreement, man, my eraser keeps coming up. The lease purchase is the stone, and I'm trying to get my marker here. Let's call this the one stone. The two birds you're knocking out is the DTI with this section, and then the down payment with this section. Okay. An underwriter looks at a lease purchase and they're like, okay, this is a purchase contract, meaning John Smith is going to buy this property at, let's say, 3 months from now, 6 months from now, 2 years from now, whatever. But they've agreed, buyer and seller have agreed that they will rent the property to the buyer for a certain amount of time. And that certain amount of time is not called out in the lease purchase. It just says that for right now, until we decide the closing date, we're going to accept a $2,000 payment from the buyer. And that $2,000 payment that you're accepting washes out the DTI. And then the 25 grand that you're giving as a good faith or earnest deposit becomes usable funds for their subsequent transactions they're trying to do right now that they can't really wait 60 days for those funds to season.
All right, I pulled Ingryd up because you looked like you had something you wanted to say.
No, this is exciting. So I think you ended up covering what I was going to mention because I'm very tactical, right? Like no fluff. Give me like the pieces. So in this hypothetical timeline of October 1st through December 31st, part of the things that come to mind is like, what dates do you put on the contract? So you have a valid contract, right? Because contracts require a begin and an end date in order for them to be valid contracts. Contract law 101, right? And things like that. So I did have it was not as clear to me originally, like what kind of dates to use so that we're not setting ourselves or our veteran up for failure. So
yeah. Now I want to be clear on a couple of things. When I say lease purchase, the lease purchase agreement that we use and we didn't draft it, but we sort of picked the guidelines that we need to satisfy. What we do is we take your Subto contract. We're not here to educate you on the numbers that you need. We want to make sure that does the purchase price, does the down payment meet your buy box? Great. So you have a valid deal that you're willing to close on. Now I'm going to take those numbers and transpose those onto this lease purchase document that we use. It's only for loan guidelines. It will never hold up in a property court of law. It's not meant to. We're not here to say that this applies in Rhode Island's property court of law. It's not meant to do that at all. So my lease purchase is really a reflection of the numbers in your Subto purchase contract. My lease purchase never makes its way into your file. Your Subto contract never makes its way into my file.
yeah.
But if both buyer and seller sign my lease purchase, it's only because they've agreed on the purchase contract to actually consummate that transaction.
It's more like a loan facilitation tool more than it is a protection tool in terms of the asset and, your landlord policies and things like that. This is more of a loan tool.
Yep, you got it.
Right. Cool. There's a lot of buzz in the chat. I love this. So please, we recognize that this like blow your brain knowledge will help you with many of the objections that you get today or you get from especially your veteran sellers. I think one that I saw was these would all be for primary home purchases, right? So can a veteran use their VA for an investment property?
No. Veteran, like VA loans, FHA loans, if you're applying for those loans, you're stating that you're going to occupy it. It's a document at closing. You sign. It's a legal affidavit. And obviously your income needs to support the fact that you're going to be living in the property. If you have a W-2 job at Walmart in Portland, Oregon, and you're trying to say you're going to live in Nashville, Tennessee, we're going to want to see a letter that you can transfer to Nashville, Tennessee if you're going to claim it as your primary home.
Yep.
There's still the good old-fashioned nuts and bolts of underwriting you have to satisfy. So for those that want to use their VA to purchase investment property, the only time that would be passing the smell test is if they're buying a multi-unit and they're going to live in one of the units.
Yeah. And generally those are 4 units or less. So
right. Which, by the way, and for those that don't know this, the county loan limits for multifamily go up. So if you're buying a single family residence, it's 726.2 right now. 2 unit is like 850, 3 units like 989, 4 units like $1,089,000.
What? Caroline? Caroline?
Well. I'm getting everything ready to roll. So send me your deals. Send me your deals. I am a veteran. Thank you for thanking me for my service. You're worth it. Send me your deals.
Yeah. And you can use projected rental income to qualify on those.
So that you don't even have to have them rented. They're just projected. Is that through like an appraisal process?
Yeah. So we order an appraisal and then a rent schedule from that appraiser. So the market rent covers the debt service. It's almost like a quasi DSCR/VA. But you're absolutely allowed to do that.
Fantastic. Cool. What questions do you have, Caroline?
Oh, man. Well, I had a few, but they've gone out of my brain. But let's get into what I've seen in the side chat here. So we already answered the question about it has to be a primary residence. Yes, you cannot. After you've lived in it, though, for the year, you can turn it into a rental.
Let me pause there. So if you walk into a primary residence purchase and you fully are in good faith occupying the home, if you get relocated in 6 months, you get relocated in 6 months. Like an underwriter on the next purchase is not going to be like, were you lying on that last transaction? It just doesn't happen. As long as the ducks line up, then it makes sense. So
I've got a question. Actually, I do have a random question here. So my sister is in the Navy. I was in the Army. My sister's in the Navy. She's stationed in Japan right now. Could she buy a house before she returns back to the States?
Yes.
How would that work?
So we use the income. Obviously, if she's paying, I don't think she's paying rent in Japan, is she?
You know what? Actually, she's an officer, so I think she might be. But I feel like they have BH. I don't know. They should be covering it. I think she's got some weird stuff. The Navy, I don't know. I know it's all the military, but I think she's paying for weird things over there.
Yeah, so if it's the only residence that she owns, then she's allowed to purchase a primary residence stateside.
Okay. That's pretty cool. She wants to move back to San Diego.
Okay.
So, also, I do have a question before I get to, and guys, if you have a question in the side chat, put 3 question marks on the end of it so I can see it. I'll pull it up really quickly and I'll throw it up on the screen so we can rapid fire Maddie B with the last 13 minutes here. Entitlements. Let me just make sure that I understand this completely. Depending on where I live, I have different amounts of entitlements.
Yes.
Okay. I'm originally from Indiana. The median price for a home in Indiana that is like nice is $142,000. I now live in Phoenix. That would be like a mobile home where I live in Phoenix. The median price for a house is $450,000. Yeah, $450,000 for the median price of a home. So here in Phoenix, if I want to just go get a VA loan, I'm just buying a single family house. I should typically be approved if I'm making enough money to buy a $450,000 house. But if I go back to Indiana, I'm not going to be able to buy a $450,000 house in my little small town. Correct?
Yep.
Okay.
No. Whoa. Say that again. Sorry. I'm looking up county loan limits as you're talking, so forgive me.
Okay. So here in Phoenix, median price is $450,000. Okay. Right. But you know what? I don't like Phoenix. It's too hot. Like the sun, I'm closer to the sun here. I don't care if I have all the amenities in the world. I want to go live in a cornfield again. You know what? The slow living in Indiana where I have stoplights is what I want. Could I go and buy a house for $450,000 in Indiana, even though the median price range of a house is, I'm going to take us off here, 142.
Yep. So here's how you do that. And I'll tell you guys what I do. Here's how the sausage is made, if you will. So Maricopa County is 726.2 loan limit. The limit in Indianapolis is 726.2. So county limit's the same, even though the metro areas and even the outlying areas are still very, very different when it comes to prices. I use the HUD.gov site for my county loan limits. I'm a smart guy. I don't have all the counties memorized, to be clear. So I'll literally just go to the HUD.gov site. I'll just do Google county loan limits, HUD.gov, and I'll go here and I'll just go to Indiana and give me a county.
Howard County.
Howard or Broward?
Howard, H-O.
Do you click on Howard? So in Howard, the FHA limit is 472, but down here you'll see the county loan limit for Fannie Freddie. So Fannie Freddie 726.2. VA follows Fannie Freddie when it comes to loan limits. So for example, if you see a 2-unit is $929,850 on Fannie Freddie, it's $929,850 on VA for a 2-unit. Same thing on 3 and 4.
Okay, okay, go ahead.
I was gonna say your county limit is if you're buying a house in Indiana and you've got a $450,000 house in Phoenix, you should have zero issues buying a $300,000 mansion in Indiana and doing 100% financing.
That's okay, great. That's what I was like, am I going to be able to go back and buy like the nicest house in the entire, like I'll buy the mayor's mansion over there. So I just didn't know how that worked. And then the last question before I get to the side chat here. So our entitlements, say I'm buying my first house. I'm getting my first house with my VA loan and I'm buying it here in Phoenix. You know what? I thought about Indiana, but it's just, I'm over it. I lived there for 24 years. I want to go back. I'm going to live in Phoenix. I spend $450,000. And you know, I've lived here for a year. And you know what? I heard about renting these things out. I read the Purple Bible. I want to get that passive income. I'm going to go buy another house. It's maybe 2 years. Okay. How much money can I spend? How much do I have left in my entitlements?
If we're talking entitlement only and not income to determine your next purchase, because those two really are undivorceable, to be honest with you. You can be able to buy a $500,000 house entitlement wise, but your income may only support a $400,000 house. Mm-hmm. You won't necessarily know that until you go through a loan app and know what the income is. But just for this illustration, entitlement only, if it's $450,000, let's say you bought a house for $450,000 and you did 100% financing. Mm-hmm. For going back to my 4-step process, $450,000 times 0.25 is $112,500. So 112.5 is the VA guarantee that's outstanding. I take 112.5 from 181,550 if you're buying another single family.
Okay.
So you have about a $70,000 entitlement guarantee remaining.
Okay.
Times 4. So you could buy a $278,000 house, 100% financing.
Okay. And if I wanted more, I'd have to have a down payment to go for it.
And if the down payment's greater than 5%, I just say go conventional at that point.
Gotcha. Okay. That makes so much sense. Thank you.
Yes, Don Rich, Mr. Matty B is in Dallas. He is your man for all things lending. We were supposed to close on a house yesterday. So I wanted, even if the notary were to come and be like, look, I'm signing with Matty B right now, but it didn't work out. So we're just waiting for some of the last
It'll happen.
things.
It'll happen.
But I will say, just from a stress perspective, I've had to deal with other DSCR lenders where I had to be on their butt a lot. Didn't have that experience with Matt. We've had exchanges and things like that, but very typical of a transaction, not anything that would stress me out is what I'll say. So definitely if you're thinking, I know we've been talking about buying primary homes, but just like Matt said before, he helps service all types of loans, including DSCRs.
Yeah. Ground up construction is kind of a new flavor of the day too. I mean, a lot of people are wanting to buy land. We did those too. Let me real quick before this gets away from my brain, speak into the conventional piece. The only difference between VA and conventional is on conventional guidelines. If you're renting out your property, let's call it for a month or two while you're waiting to close on your new property, underwriting per Fannie and Freddie guidelines state that whatever payment the buyer is going to pay you, let's say it's $3,000 a month and your payment is $3,000 a month PITI, the underwriter is going to apply a 25% haircut to whatever that monthly rent's going to be. So in this case, you raise your lease purchase amount monthly by 25% so that after the haircut is applied, it's a 1-for-1 wash on the rent versus the PITI. So for example, now here's the other difference too. The other difference too is on VA, if we're doing a lease purchase, the VA guidelines are really clear. The Subto buyer does not technically have to write a check for the first month of rent. That's what the guidelines say. On conventional, you got to write one check to make that transaction be bona fide. So if the PITI is $3,000, you would want your first check to be $3,000 times 1.25. So your check needs to be for $3,750 if the PITI is $3,000 even, so that after the haircut, it's a straight wash. And that's the only check you have to write. Now, what I do tell Subto buyers is if you're giving a $20,000 down payment and you got to write a check for $3,750, deduct that from your down payment. And now you got to pay what, $16,350 or something like that?
Yeah.
At the closing or whatever.
Yeah.
So build that first month rent, if you will, into your down payment amount, and that's what'll help get the transaction consummated.
Yeah. That's fantastic. Now, I mean, that was a lot of gem dropping right there. So
I wish we had more time.
I mean, I could stay a little longer, but yeah.
Stay a little longer, or we could have you come back here again and do this another time, because I think what are we booked out till, Ingrid? I think we have some openings coming up in a few weeks.
Well, you know what we could do is we could do a live podcast from Florida when we're there for Bigger Pockets.
There we go.
So yeah, get out of this virtual land and have it face to face. So I'm excited about that. Are you?
Oh, absolutely.
Are you going, Carolyn?
I haven't booked my flight yet, but that's the goal.
Okay. Hey, real quick for the group, I don't know if you guys know this. So Pace had a DTI call a couple of weeks ago with Brian Maddox from Guild Mortgage. Mm-hmm. I'm doing round 2, I think next week. So I'm sure if it's a 2-hour podcast, we'll do a lot of this stuff as well. But I think that's going to be, I'm sure, 2,000 people on that one. You won't get a chance to really ask a lot of questions on that call.
Mm-hmm.
But yeah, I think my theme of these conversations is you have no idea how many times I have gotten, you can't get this done. I don't qualify. My lender left me at the altar. You just can't do it. I don't want to talk to you. And I'm like, will you just shut up and give me a shot? I don't say that, but I say it diplomatically. I'm like,
and so many words.
Yeah.
And the reason why is because if you make it that far with a lender and this is the only piece that's missing, then I know we're going to get this done.
Yep.
And then for the folks that don't know, and you can post this if you want to, my YouTube channel, I've done this exact calculation on the iPad on a series of YouTube videos. I made some for Subto people, some for sellers and agents.
Is it under Bellgroupcmg?
No, it's youtube.com/the @ and then borrow and build it.
All right.
I got 25 Facebook messages last week from people that were like, hey, I don't need you for a loan, but your videos closed my deal.
Oh,
that's dope. So, I love that.
That's just as fulfilling as doing a loan.
There we go. I'm used to being able to share it this way so we can all still talk at the same time. So I'll put it in the side chat so everybody can have it as well.
If you click on playlists there, you'll have a Subto, a VA, a renovation loan playlist, all the different playlists that'll be helpful.
All right, so let me subscribe. This is the life hack right here. When you subscribe to people on YouTube, let me zoom in so you can see it. I'm going to come over here and click subscribe. And this will help you when you guys subscribe to our channel. Click on this arrow here, and every time Matt goes live or anything, I'm going to know. I'm going to get an alert. If you guys do that in the future for us, you'll see when we're live on here, so you can get in with other guests when we do special events. But
he's got 9 new subscribers.
Hey, there you go. Yeah, boom. Thanks, guys, for giving him that follow.
Yeah, wonderful. And one thing I wanted to call out is that,
welcome.
Yes, we will be having more DTI conversations if you're in Subto. So Caroline and I, of course, put this together knowing that we could give value beyond Subto. All we ask is that you hit a like, share this video if you found value, and if you want to do deals, just DM us on Instagram. Both Carol and I are always looking for opportunities to squat up with you guys. So happy to help you get some of these deals through. Obviously, we've partnered up with very knowledgeable folks like Maddie B. So there isn't a reason why we can't get your deal, if it's a deal, to the finish line. I mean, at the end of the day.
Real quick, Carolyn, can you pull up my website too? So people want to reach out to us. There's a link to schedule a call. The website is bellgroupcmg.com.
Look, it's spoken like a businessman. He's like, wait, before you just DM me and call me and whatever. I'm gonna tell you
there's a system.
There's a system behind this.
Well,
I love it.
If you schedule a call, you go into my Salesforce, and then I make sure that I absolutely reach out to you. So,
right there.
For the group, here's what I want to say. The majority of the questions you're going to get are answered on the YouTube channel. So watch those. I'm not trying to, I don't get any ad revenue from any of that stuff. But I really value detail, like extreme detail, because the devil's always in the details. Watch the YouTube videos, send those out to your sellers and agents. Say, hey, don't take my word. Take a guy who's been doing it 21 years. You'll find that the walls will come down, I think, when those videos are watched. If you have a deal that you want to walk through, click the schedule a call link right there, and you'll get right to my calendar. If you want to just sort of shoot the breeze and talk about VA loans, I would ask right now that just because of our calendar demands, text us and say, hey, I don't have a deal, but I'd love to pick your brain on some things. Shoot us a text. You will absolutely get a response. I may squeeze you in if I have a cancellation. But leave the calendar for the deals that are live, and I need like service on these deals right now. So,
okay, that's fair enough. That's easy enough. So right here, we should text you this number 972-999-1900, and that's where we should just text you to shoot the breeze.
That'll go to my dial pad, and if I don't have you in my Salesforce, it'll go into my task leads, and I'll make sure that we respond immediately or at the end of the day.
I love how organized you are. That. Honestly, guys, the older I've gotten, so actually, I don't know if you saw my Instagram yesterday. We have a hummingbird feeder, and I watched a hummingbird go up and try and get water yesterday, and it filled up.
You're so 40 years old.
I know. Birds make me happy, and somebody who's organized and knows the details I'm just like, gosh, you probably, when you're not driving fast, you get in the right lane. You're like, oh, that's just so nice. So, wow, thank you.
Maddie, do you also do HELOCs or just purchase and refi?
Oh, yes. Oh, my gosh. So I'm so glad you brought that up. So,
what is a HELOC for everybody new that probably doesn't know what a HELOC is too?
A home equity line of credit is a HELOC. Okay. It is normally, not always, but it's normally a second lien position behind a really attractive first lien.
Okay.
Or if you're free and clear and you don't need cash now, but you need cash in the future, a HELOC is a great option just to slap it on there for future cash needs. We offer HELOCs in all 50 states on primary, vacation, and investment properties.
Oh, I got a question for you. So, because I've actually seen this before. What if I buy a house subject to from Ingryd?
I know what you're saying.
I know
where you're going. I know where you're going. Yeah, so a lot of the folks in Gator buy properties subject to, and there's lots of equity, and they want to touch that equity. And so you can do HELOCs if you're the rightful owner and you're willing to be the borrower on the HELOC. You can take a sub-to first, leave it in first lien position, and do a HELOC behind it, even though you're not the borrower on that first lien. Absolutely, you can.
Ingryd, we might have some more money on some deals, buy some more houses soon.
Here is what's cool. So we have 2 platforms, and this is so crucial. Again, this is details. One platform is what we call a QM platform. QM means qualified mortgage. You got to be W-2, tax returns, qualify, all that jazz. Not everybody in this community has that. So we have another platform that's QM and non-QM. So if you have business bank statements that show income, you can use those business bank statements to qualify. That's 90% of what I do in Subto is on the HELOC side is for business bank statements. So don't be deterred by the fact that you have non-traditional income. We can probably do it.
This is where my brain went right after you said that. I'm going to take money out. I'm going to go get an insurance policy. I'm going to loan that to myself, and now I'm going to have that grow and compound interest while I go and buy my husband a car. He's been asking about a car. So I'm like, The
beauty about these, so if you're going through a bank, so banks have a different platform versus like national mortgage bankers. There are some banks that will lend on investment properties. The lion's share of them will not because they're risky. But if you have an investment property that's got some equity, most of our HELOCs close in 7 days. There's really no appraisal needed.
What is the payment usually on that HELOC?
Always expect prime plus 2.5% to 3%. That's just the unsexy nature of investment properties. They're always going to be a higher rate.
So when people take out HELOCs, what are they typically taking that out for? Like, they're taking it out for a little bit of time and then they're just paying it off? What is it? Why does the person taking it out?
I bought a house a year ago, Subto. It's got equity now. I want to maybe do a small rehab on it. Or I've got 3 other properties that I want to fund my own entry fee on. Or if I'm a Kevin Cho and I want to start funding some EMDs and some Gator stuff, that's another flavor as well. A lot of the HELOCs that I do are for the Gator world, just so they can be a bank.
Yeah, Gator method. So, if you guys don't know about that, chat with us and we can help you with that. Caroline and I will also do EMD Gator partnering is what I prefer calling it.
Hey,
we're
on the video live or the stream.
Right now, we've got over 40 people on here between our Instagram. We're right around 50, I think.
Love it.
Yeah, I got 10 other over here.
Yeah, about 50 people live right now. But I've seen a lot of people that are over on a live at Pace is doing, and they said they jump in after the fact.
I think I've got just one more thing I want to say. I'm always looking to broadcast, evangelize this knowledge. Again, as a lender, just to be really clear about our intentions, I am not allowed to make money unless I make a mortgage loan for a client. I can't JV with you. So my videos to you are my ability to JV with you. Again, I cannot be paid for that. If a seller does not need a loan, still use my videos. If you're like, Matt, call my seller. They don't need a loan, but if you can talk to them, it'll close the deal. I'll call the seller. It may not be like in the next 5 minutes. It may be in the next 5 hours. But just, I'm not here. I can't get compensated unless there's a loan to be had. And if there's not a loan to be had, we'll still talk to the client. Yes, Brandon has a question. There's always a difference in LTV. Loan to value is your LTV. On a primary residence, most states we're going to cap you at 80-85% on a primary home. On an investment property, we're going to cap you at 70%. Most lenders in their right mind are going to cap you at 70% CLTV, combined loan to value. So for example, if a property's worth 500, let's say it's worth 500 and it's verifiable to be worth 500. 70% of 500 is 350. If you owe 200 on your mortgage, we can give you a line of credit for 150.
That makes sense.
CLTV of 70%. If you have a debt on the property, if you don't have a debt, we'll do 70% loan to value.
That's awesome. Very good.
There's a question over here. I've never heard of this. Do you do relocks so I could borrow against an existing rental? Are relocks a thing? Is that something that you call when you have rental properties? Or do they mean to say HELOC?
Figure out what the acronym is. Residential line of credit. And maybe it's a HELOC just by a different name. Rob, are you there, Rob?
He said they are in an LLC, and so far I haven't found a line of credit for my LLC.
We don't, and here's a legal reason why they're not done. You can broadcast this out to the world. LLCs can change members all the time, and so most banks, in their right mind, are not going to lend to an LLC. They're going to lend to a natural person. So if your LLC gets terminated, they don't want their debt to be terminated. They want to have a natural person that they can file liens on and judgments on if you don't make the payment. And that's the reason why LLCs cannot be the borrower.
Got it. So even if we do get a HELOC on a rental property, it has to be under my name.
You have to guarantee the debt.
Okay.
Personally.
Now, it won't necessarily show up on your credit report if you pull credit on somebody, but you always have to sign a personal guarantee form so that the debt can follow you regardless of what happens with the LLC.
Got it.
Oh, no.
Okay. Interesting.
Little commercial law for you.
All right. I've seen Miriam ask this question twice. So Miriam said, can you use both FHA and NACA loan? What is an NACA loan? NACA.
NACA is, it's mainly a first-time home buyer, 100% financing, no PMI product. Typically, if you're doing NACA, you don't need FHA, but if you have a FHA first lien and a NACA down payment assistance, you can combine those. That's more for your first-time home buyer crowd, but it can be done. It's been done.
Okay.
Well, there you go.
And then we kind of already answered this earlier, but I'll be kind and I'll go over to Jay's question. Jay said, newbie here, excuse me if this is answered. If I'm taking over a VA loan Subto and I am not a vet, how do the terms work with a lender in the future?
So let's talk about Subto. I think what he's trying to get at is assumptions versus Subto. Let's draw a very clear distinction on what assumption means. And the actual word is qualified assumption versus Subto. For the group that may not know this, there are two types of loans that are usually what we call assumable. So if Caroline has a debt and she's a veteran and she needs to go move to Indiana, if I'm a non-veteran, but I'm moving to Phoenix and I might want to live in her property, if I'm well qualified, if I meet all the VA guidelines, I could apply to her lender to officially not just take over the debt, but actually become the obligated party of record. Okay. Now the debt would fall off of her credit report, but because I'm a non-veteran, the entitlement would not be restored. If I were a veteran, assuming your loan, let's say I qualify, that I'm bringing my own entitlement to the picture, the debt falls off of your credit report and the entitlement is restored just because I'm bringing my own entitlement. Okay.
But when I move, I get to keep my entitlement. The entitlement comes back when somebody else assumes it.
If a veteran assumes your loan, what a qualified assumption is, if I'm your buyer, I'm literally calling your servicer and I'm saying, hey, Caroline's selling. I want to actually apply. I go through a mortgage application to take over your debt. If my income, credit, and assets meet the VA guidelines, it takes about 90 days to do a qualified assumption. If it's done right, then the debt falls off your credit report and the entitlements off of your books. And now you can go freely purchase wherever you want to.
Okay.
Subject to the guy that asked the question, subject to is very different. There is no assumption process. You're just essentially taking over the payments. And the veteran obviously can purchase a property downstream using subsequent entitlement. And then we've already talked about the DTI impact on that.
Yeah, definitely rewatch this podcast, Jay, from the beginning. And then that answer and the formula behind that answer will also be provided. So, well, Maddie B, this was very, very fantastic. I'm not seeing any other questions that stand out. but we are excited that we want to have you back. Obviously, this is a great value to folks, and thank you for doing the math.
Love it. Happy to help. Thank you guys for having me.
Thank you
So
so
I'm
much.
also going to show you next time, use that link and put it on your YouTube so you can go live on your YouTube too and attract some more folks over.
I was trying to, but I forgot my StreamYard login.
All right. Okay. Cool.
Technology. Well, again, thank you so much for coming on. I want to ask you one question before we bounce. I like to ask this to our hosts. If you could go back anytime in your life, talk to yourself for 2 minutes, when would you go back and what would you say to yourself?
The old adage, if you're losing weight, nothing tastes as good as being thin feels. I did Weight Watchers 15 years ago, and that was one of the big mottos. I take that same thing and apply it to my 20s.
Mm-hmm.
Nothing is as satisfying as being free feels. And so anything that robs me of freedom and peace is now a no.
Ooh, I love that. Actually, we just did the mastermind here that Ingryd and Marlon threw at the Mindset Manor. And I don't know if you heard me say this, Ingryd, but I said this to quite a few people. I've been sharing the mastermind with everybody. If you guys if there are any openings, you guys should definitely come to the next one. But Marlon and Ingryd hooked us up with breath work every day. And I have ADD, so I'm always like, what's the next thing? Like I've been really on the ball. I've been using my planner, getting all my stuff done. I told Ingryd at the beginning, I've been at my computer all day. But we did some breath work. And that was one of the first times I felt like absolute peace and freedom in a long time because my brain just kind of shut off and I was in the present. And guys, you know what, Matt, I agree with that because I used to say I'd go back and talk about financial freedom and getting ahead of it, but nothing feels as good as freedom. So you don't have to hear anybody else tell you what to do. You get to go wherever you want. That is the way to be, especially coming from somebody who's in the military for a little bit when I was government property. It is so nice no longer being in. So
well, I think Cody Sanchez, I think she said it well. You're not pursuing wealth for wealth's sake. You're pursuing wealth for freedom.
Mm-hmm.
And that for me, as you know, like you said, I get in the right lane. The older I get, the more I want to stay off the police's radar. I'm going to get in the right lane. I'm going to use my blinker. That piece matters more to me as life gets busier. The ability to go to bed at 8:30 and know that I'm free it matters to me.
Well, Matt, I have a question then, because you are a go-getter and a go-giver. What is one of your goals this year to associated maybe to bring more peace into your life?
So glad you asked that. So here's what I love about doing what I do, working for who I work for. I love my company. A lot of loan officers are looking left and right for the next greatest thing. I love where I work. Where I work gives me the freedom to explore a lot of different things, entrepreneurially in a way. What I am looking to do, and I'm in the process of doing it, it's a 6 to 9 month project. And this is not Subto. This is Subto plus 90 million other things that I want to do by the time I'm 60. Being in real estate, the biggest inefficiency is capital, in my experience. Obviously, finding the deal, but then if you know your capital options, it makes you so much more enjoyably able to find the deals that you want. So many investors that I talk to have a lender for this, a company for that. Oh, call this guy. He does this very unique thing. Well, what if that guy is no longer at that company? And what I'm trying to do, and I'm about 25% of the way done, is to build a platform and a network where you can literally get everything done under one roof. Borrow EMD, borrow 80% DSCR, new construction for an apartment building, commercial loans, HELOCs, you name it. I want to be a central place to come to. If you're an immigrant and you have a non-permanent visa and you want to borrow 70% to buy your dream home, not a lot of lenders will touch that. I want to be able to say, we absolutely will do that. It takes a lot of relationships with not just your company, but other capital partners to do that. And so having right now about 63 lenders in my portfolio that can do the things that we won't do. And so that's why when people call me, they're like, how can you do this and nobody else can? It's not because I'm special. I have a relationship with Bob up in upstate New York who has a $50 million line of credit and he's willing to do this. And so that's a big thing for me, to provide a one-stop shop. That's my goal in the next 10 years, is to literally be the one-stop shop.
That's awesome. That's a big dream and definitely worth going after. Very cool.
Yeah.
Well, Caroline, would you like to sign us off?
And you know what I would. There's one thing I just kept looking at Matt's, and this is just me being ADD going off on a tangent. I'm like, Matt looks like a celebrity that I know, and I did the research. And Matt, I found who you look like. You might not know this guy. I watched a TV show and freaking middle school.
Is it Harvey Specter? Please say Harvey
No,
Specter.
it's not Harvey Spencer. It's this guy. Let me see if I can share it.
Harvey Specter. I love
His
Harvey.
name's Jake McDorman. Tell me this is not your son or your brother. No,
I don't know if it is.
Are you telling me that? No, I think that looks like.
What is he playing?
He was on a TV show, Greek. I don't know what else he's been.
Oh
on.
yeah. I've seen the show. I don't know his name, but it's funny.
Yeah, I'm just like, that looks like Matt. But anyways,
do you get Harvey Specter?
I wish. That's what I was saying. I wish it was Harvey Specter.
Oh my God!
If I stretch my hair up a little
that
bit,
guy too, by the way.
I might do Harvey Specter.
I had COVID last week, and I took it as my sign to slow my roll. So I was like, fine, I'll watch Netflix. I found Suits, and I was like, this man is very attractive.
Hey, fun fact: if you want to know something that changed me, like you have these paths you take in life. Mine was 2012. It was right after President Obama got reelected. I was trying to figure out how to harness this intellectual energy. And so I went on Netflix and found The West Wing. And I was like, I've never watched this. I know obviously it came on from 99 to 2007.
I love that show.
And so I fell in love with The West Wing. And when they started talking like public policy and like law, I was like, oh my gosh. And so it made my mortgage world just so blossom from that show. That show was the path that changed my mortgage career. To be silly as it sounds. Josh Lyman on West Wing literally made intellectual stuff sexy, and that's what was it for me.
We're two people because I loved The West Wing. I loved it. I'm also pre-law. I thought I was going to go be a lawyer, and so anything that kind of has that sort of flavor to it, I love. So.
It's Aaron Sorkin. Anything Aaron Sorkin I'm a fan of. So, all right, thanks, guys.
Yeah. Anyways, guys, thank you so much for coming on this live. Watch it again if you would be so great. Share it with somebody else. There's a lot of sauce in here. And if you're not already, go to Matt's YouTube to learn more about VA loans. I know that we learned a lot. If you guys are on Instagram Live, thank you for showing up. This is free. We don't make any money off of this. We just want to help more people get started. We remember what it was like when we were new. And thank you for showing up. We appreciate you guys being in here and participating in the side chat. So great that you guys are on here. Click the like button on this video. Share it. Subscribe if you guys aren't already. Matt, thank you so much. Ingrid, thank you for talking to Matt to getting him on here. Guys, make sure you're on Ingrid's Instagram and letting her know because he would not be here without Ingryd. So thank you guys so much. Have a great evening. We will see you next week, Wednesday at 4 o'clock Arizona time.
Thanks, guys.